I do want to bring in Kevin Pemberton. He's a senior strategy advisor for capital markets at Microsoft. Kevin, it's great to have you on the show today.
Great to be with you.
And a lot of action that we've seen in this equity market of late. What do you think it means for our viewers?
So certainly there's been economic forecast has deteriorated in the past few weeks. Right now we're in a situation where the bears have outnumbered the bulls. Consumer spending has slipped. I'd like investors to take watch of consumer spending, consumer sentiment, that long run inflation jump from 4.3% to 4.9 as a better way to gauge the pullback on the household spend.
Interesting. Now, certainly there has been volatility and a pullback. Factors like a recession, the Treasury Secretary had said that he's not necessarily ruling that out. How should our viewers navigate that factor?
So as you think about, you're your best and biggest advocate in this environment. So due diligence, critical here. So, I think about buying fundamentals, which is, seek companies that high quality companies, great price, right? So reasonable price. You also want to stay close to your investment objectives and stated, sort of risk profile, if you will.
Yeah.
But you also want to be keen to those strong balance sheets, right? And that means, net debt to EBITDA lower around 2.5%, and then, purchase companies that have a high return on the investment capital to around 12%.
Yeah. Now we will get a Fed decision on Wednesday when it comes to interest rates. Do you see that impacting stocks in the sense that the president has said he wants rates lower, but Fed Chair Jerome Powell has pretty much stood his ground?
It certainly can. I mean, the risk here, it's about asset preservation for investors. Wealth creation continues to be a theme, but there are some structural challenges as well. Mm-hmm. When we think about 40% of investors are interested in consolidating their assets with fewer managers, 50% are interested in switching managers. And then, there's the theme of expense rationalization, fee, erosion, mm-hmm. right? And I have to say that regulatory compliance continues to be a decline or cause of erosion in this space. So, that's the challenge, right?
Yeah.
But where I see the opportunity is also in the evolving landscape of technology. Mm-hmm. There's also an opportunity for better connected workflows mm-hmm. that align with investors in objectives.
Yeah, so let's drill down a little bit more into technology. Obviously, you mentioned the fundamentals, Kevin, which in this environment certainly are paramount. But what do you find attractive, perhaps, about some of these technology names right now?
Yeah. Well, there's been a massive, change management agenda that occurred, and specifically in asset management and wealth. Uh-huh. And that's been driven by a couple things, right? There's a underinvestment in cloud adoption, underinvestment in digital simplification tools, systems integrators, overuse of shared services. Uh-huh. Right? So that's the look back. I think going forward, we now see, 2/3 of enterprise technology decision makers see AI as a core component to their arc of innovation, mm-hmm. as well as unlocking net new markets.
Yeah.
Net new products and services, alternative and adjacent revenue streams.
Yeah.
I think of it this way. If you were to, across the asset management value chain, if you were to drop AI in there, what would that mean for sales and distribution, right? Perhaps more of a hyper-personalization of the customer segment, better connectivity in terms of stream and workflows.
Yes.
Or what the investors are currently looking for today.
Yeah. So I would like to drill down a little bit more on artificial intelligence, because amid this pullback that we've seen in the market, in really kind of a 180 in this administration, priced into the market was very strong economic growth this year, and we've seen that change course since mid to late February. Artificial intelligence stocks like semiconductors have been among the sectors that have seen perhaps the biggest pullback. Does that change the thesis, you think, when it comes to investing in AI for the medium to long term?
So there is a massive transfer of intergenerational wealth that's going to occur, right, through the course of 2045. $84 trillion to be exact. And that's where you've got baby boomers and the silent generation passing that on to their heirs. Wealth is a data business. And with that being said, I see the consolidation and normalization of data to surface insights on specific, data sets. I see AI as a first differentiation. Mm-hmm. I also see Copilot now, right? And agents mapping and redesigning business processes that are going to offer more self-service features, proactive notifications. So if it's a bond maturing, you'll be able to get that. And investors are also mobile first going forward, so that will be a capability. That's being explored, and certainly a number of organizations are already there.
Yeah.
And I also see, as I think about the future, what does that mean for the ultimate client experience?
Yeah.
That's going to reshape that discourse.
Interesting. Kevin Pemberton, he's a senior strategy advisor for capital markets at Microsoft. Kevin, thank you so much.